Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. Well, first up, our top discussion for today, the Sensex is down to 27,000 points. It's down more than 10% since its March 2015 peak of 30,264. Now, the big question is, where are the markets headed? Are there more frightening signals underneath all of this that we see? I'm joined, of course, by Ambarish Balega, market analyst, and Avinash Gorakshakar, head research at Mint Direct. Gentlemen, thank you very much for joining us. So, Ambarish, let me begin with you, right? So, in March 2015, March 2015, we said the markets were looking good. We were looking at a 35,000 target, and now we are seeing a situation which seems to be sort of headed completely in the reverse direction.
Right.
Or how do you see it?
No, I'll tell you, the last 12 months, basically starting from February, March 2014, and once the Modi's election was done, the sentiment was just going through the roof. And people expected that things will change overnight. And based on that, the markets kept on moving up.
Right.
We had a close to a 50% sort of a rise in a year's time. But then finally, things have to start moving at the ground level. Once people realize that it can't happen so fast, along with that, you have the earnings, which, we're not seeing any sort of improvement. Instead, earnings are deteriorating and not expected to improve for the next couple of, possibly next couple of quarters, next 2 quarters at least. We have a MAT issue, which was not expected. Retro tax was, that
which is spooking the foreign institutional investors.
Absolutely, absolutely. And at the same time, in the parliament, things are not too smooth. Monsoons, which was expected to be normal, the latest reports are saying it may not be normal, maybe slightly below normal. So right now, there is nothing positive to look forward to. And the markets were overheated, overvalued.
Right.
So it had to correct.
Right.
And if you go back the last 12 months, none of the corrections were meaningful. You had a 4-5% correction.
And
I think the maximum correction was about 7%, and then we bounced back, which was very recent.
And by all indicators, there is still positivity priced into this market.
Yes, absolutely.
Right.
Yes.
And, which might concern some people.
Right.
Okay. So let me put the question of earnings to Avinash. So Avinash, Q4 earnings for 2015 have been disappointing. What specifically has been disappointing? Because not all companies are doing badly. Many companies, some banks, some car companies, they are showing robust numbers, aren't they?
No, I think, Govind, I think clearly if you see the infrastructure sector, the capital goods sector, more importantly, FMCG companies, I think clearly at the ground level, I think demand has not picked up. And I think despite the fact that rate cuts have happened, the core issue is, I think, demand. I think demand has not moved, and I think most of the capital goods players are still hoping that, government projects would take off. A lot of infrastructure projects have been actually bogged down by environmental clearances.
Right. No, so if I were to ask you about corporate earnings specifically, when we say that corporate earnings were bad, right, and that's one reason that the markets are reacting negatively, what is, how can we break that down?
I think clearly, as Amrish was saying, I think liquidity was pushing most of the high beta sectors, specifically infrastructure, capital goods, construction, typically road players. So I would say that, I think the pharma stocks also went up. So I would say that, the larger piece yet remains to deliver on the earnings side. And I think analysts were hoping that probably, we could see maybe, 5% earnings growth for FY15. I think we could probably see a negative growth if you look at FY15 over FY14. And FY16, my sense is also the first 2 quarters are going to be extremely bad.
Right. So, Ambarish, are companies doing badly then? I mean, that's what this seems to suggest, isn't it?
No, there was a clear divide. You had the IT sector doing decently well. You had the pharma sector, which was doing quite well. In industrials, you had those pockets. Auto ancillary, couple of these auto stocks were doing well. Leaving that aside, you talk of infrastructure, you talk of power, you talk of capital goods, none of them were really performing.
Okay.
The manufacturing sector was not really performing.
Right, but that wasn't performing last year as well, right?
Yes,
so
absolutely.
What's the Q4 2015 surprise here?
No, the surprise again is the IT space. I won't say it, it was a major surprise. We expected it not to do too well, but it is worse than what our expectations were.
Right.
And in addition to earnings, like I said, MAT was something which spooked the markets. So once you have a technical issue, a technical like a negative trigger technically, and market starts coming down, then it's the reverse psychology which starts working.
Right.
The last 12 to 15 months, it was buy on every dip. Right now, it is sell on every rise.
Okay, that's a very unoptimistic way. So, Avinash, tell me this. When you look at numbers on one end, and you look at some of these external factors on the other hand, what are investors really buying today? I mean, are they buying sort of longer term stories, or were they buying longer term stories, or were they buying shorter term stories, which in some ways is reflecting in the way markets are also correcting?
No, I think clearly, I think they were buying definitely stories which were into the momentum mode. I think clearly, we have seen stocks multiplying by 4 times, 5 times. And these kind of upsides actually, meant that investors were just not looking at the core fundamentals. I think an example is Wockhardt. Wockhardt went up from 800 to 2000. The stock again corrected, it came down to 1200. So I think, the kind of money made by retail investors, especially in small mid caps, was really unimaginable. No fundamentals could justify Wockhardt at 2000.
Okay.
But then the price was going up. I think fund managers were also happy that as long as the price goes up, the liquidity comes. So I think this factor obviously has now weighed down on the minds of the investors.
So you're saying that there is some inbuilt element of froth which has led to these levels?
Absolutely. Govind, I think clearly, my sense is even if the market corrects by another say 2-3%, people will have to realistically put in real returns now for 2016 rather than looking at unrealistic returns.
Okay. Do you agree, Ambarish?
Absolutely. Like it was a virtuous cycle. Like I said, there were 2 blocks. One block which was not moving, no one was interested in putting money out there. The other block which was moving, and people are putting in money, and because people are putting in money, the stock was moving up, and it was a virtuous cycle. So because of which, couple of these stocks became 5 baggers, 8 baggers, 10 baggers, and some of them, if you compare with possibly a peer, like for example, I'll just talk about possibly a Voltas and a Symphony. Voltas, the market cap, a very old company across this segment, market cap is 9,000 crores. Symphony, which is only into air coolers, market cap is 7,500 crores. Moved up nearly 8-9 times. How do you justify that?
Okay. So, my question is then, why did this happen? Is it, we also remember, I think we were talking about a situation where there were hardly any retail investors,
right?
Mostly driven by foreign institutional investors, at least the trends, the clear trends. So, what then changed, and then where are we today?
No, the thing is, see, when you make money, you tend to put in more money, and then the cycle keeps on going up.
Okay.
And till it breaks, and I think it is breaking right now. At least the medium to short term, it is breaking for the time being.
Okay.
Because of which people are staying away, possibly booking out to a certain extent where they're making money.
Okay. So now let me ask you the next question. So we are at this level now, which is to 27,011 for the Sensex, 8,181 for the Nifty. Are we at some kind of bottom?
It could be an intermediate bottom, because there is nothing catastrophic which has happened for the markets to crack sharply.
Yeah.
Trend is down, but then since in the last 2 weeks, we saw the fall was close to about 6-7%. It is quite natural that you will have some sort of a bounce back, and when that bounce back happens, we say that that's a temporary bottom. So for the time being, you can say it will consolidate in this range, maybe for a day or 2-3 days, but the downtrend I think will continue. In fact, I see the Nifty closer to about 7,800 levels, which means a fall of the 400 points, which is about 5% more from here.
Okay. What about you, Agnes? Are we at the bottom, or are we some way to go?
Clearly, I think almost everybody in the market is talking about 7,800. So my sense is, I think I would be a buyer at around 8,000 odd levels, because I think you can never time the market either on the upside or the downside. I think just concentrate on good quality franchisees, good quality businesses, and I think this is the right time to build a good long-term portfolio. Retail investors have always missed the rally. So I think if you get into an Axis Bank or you get into an HDFC Bank, these are solid companies. If they even fall, I think you're going to make a good amount of wealth generation over the period.
Or invest in a mutual fund who will do that for you.
Exactly.
Right. Okay. So you're saying that therefore the underlying strength of the market is strong.
Absolutely.
The stock markets are strong, which also gives other people confidence. Let's say a government wanting to unload some more stock and so on.
See, the point is, globally, if you compare India with the BRIC countries, or you compare
and
with US and Europe, I think there is no doubt that here money will continue to come. I think FIs for the time being are net sellers, but if you ask me the kind of returns they could actually make, the real returns, I think the risk reward is definitely favorable. It depends on when the sentiment changes. I think at 7,800 nothing changes. Even today, if you see the businesses, everything is available at a discount.
Right. So Ambarish, one of the factors when it comes to looking at FIIs, and they do indeed drive a lot of trends in our market. So there seems to be some rotation of funds between China, of course,
Right.
Russia again is looking a little strong. Brazil is looking strong. So are we sort of in a way the victims of this rotation of these funds, and if so, could that end? And
to a certain extent, thanks to the MAT issue also, because of which we are seeing some amount of rotation. But I think this is temporary. And clearly in FIIs you have various sort of animals, and the ones which are moving out right now are the short-term ones.
Okay.
In fact, they are finding better opportunities in China and Russia, so it's in fact moving out there. But as soon as India starts to perform again, you will have these funds coming back. The long-term ones I don't think are moving out, because the long-term story is still very much intact. It's only the sentiment which had gone through the roof is correcting to a certain extent. I don't think the underlying story has changed.
Okay, so now let's talk about the underlying story and let's look ahead, right? So we did touch upon the monsoon as one aspect, which is a question mark. There is still the budget session. I mean, everyone is waiting and seeing, at least from a market point of view, what's going to happen to the land bill, what's going to happen to GST, because these are all sort of positive indicators. Monsoon could of course be a negative. What else are we looking out for at as broad key trend indicators when it comes to trying to guess where markets could be going?
No, the trend indicators clearly is as to what sort of reforms can happen. It's not the question of whether it will happen or not. The question is when. Whether it can happen now or whether it can get delayed by a quarter or more than that. Number two, even if monsoons are not up to the mark, it will not be a failure. But even if it's below normal, it will possibly push the recovery by a bit. I mean, we have seen failures earlier below normal monsoons, but that has not really impacted India to a very large extent. We are that way quite resilient, I would say. So because of which it's only a question whether the recovery will happen in September quarter or whether it will happen in the December quarter.
So that's a good point. So Avinash, you were saying that demand is weak at the very, very core of it, right? So and where is this impact being felt the most? I think you mentioned consumer durables is one.
Yeah.
And what could perhaps change that?
No, I think, see, if the monsoon is not up to expectations, I think you probably would see a weaker rural demand, and that would obviously impact sectors like two-wheelers. Two-wheelers, companies are largely dependent on rural demand. You could look at a weaker kind of performance from FMCG companies. And I think clearly, I think at the end of the day, I think even just to add one more point, why the market was weak, I think the rupee has also been very unstable.
Right.
I think FIs would obviously like to wait. The currency is expected to touch 64, 65. So if that happens, obviously, whenever the rupee weakens, Govind, you'll obviously see the markets correcting, because a weaker rupee actually hurts us quite badly. So I think coming back to the question of rural demand, I think clearly if you have a bad monsoon, you'll expect almost 40-50% of the demand, for most of these consumer durable consumption kind of stories would obviously get impacted. So we are seeing
but impacted further, you're saying, right? You're already saying that they are impacted.
The earnings effect would get reflected, maybe after a couple of quarters. Hindustan Lever, for example, or for that reason ITC, these are companies which derive a large portion of volumes from the rural market. So we have not seen the results of those kind of companies till now. Even the PSU banks, a bad crop means higher NPAs for the PSU banks, and the government is all going out to help the farmers. So obviously we'll have those NPAs getting added for most of the PSU banks. So I think these are concerns which the market is now believing could possibly materially actually impact the earnings.
Right. Okay, so in the sort of, as they say, the known knowns or the known unknowns, we seem to, most of the indicators are the negative ones. What could be the positive ones, Amrish?
No, positive ones, like I said, once we have the reform process again, restarting off.
And when you say reform process, you really mean translating into, let's say, a GST or a...
Absolutely. And at the same time, unless we have the infra projects really taking off, we've been talking of infra projects for a while, but nothing really has taken off in the last 1 year. We need to see those tenders being passed, infra projects actually taking off. That is what will kickstart the economy.
And when you say kickstart, you mean not the sentiment part. You're saying the real kickstart.
Absolutely.
When, sort of cement consumption goes up.
Yes.
Okay.
Sentiment had a jump start, but here the economy needs to be kick-started, and that has still not happened.
Okay, Avinash?
I think I'll add two things to what Amrish said. I think we had the insurance bill passed after a very long period. Govind, I think everybody in the market is looking forward to what kind of actual inflow comes in the market from all these foreign companies. So that is point number one. And I think clearly, on the reform side, I think clearly GST and land bill, I think if they don't happen in the next 2 to 3 quarters, I think that's a very big disappointment and a big embarrassment for the ruling government, because they had a ruling for the land bill, and if they go back, I think it's going to be a big embarrassment for Mr. Modi.
Okay.
So I think these are 2 things which are going to actually re-rate the markets. If these 2 things happen in the next 2 quarters, I would say that FIs would come willingly in a big way.
Right. So this is the sort of slightly more macro, but when it comes to companies and industries, you're still seeing resilience in some areas?
See, I would say that on a very broad level, earnings growth could possibly be, say, between 12 to 15% for FY16, but hopefully, if the monsoon is not very bad, if the monsoon is not up to expectations, you could see that earnings growth getting curtailed to FY17, then markets would obviously discount FY17. The earnings recovery could get delayed by 1 more year.
Okay, Ambarish, what could be the sort of, if some sectors were to sort of outperform or do better and therefore tilt the balance in some ways?
No, I think the only sectors which should outperform going ahead, if things fall in place, would be the infrastructure, which is what I'm saying should kickstart the economy. You'll have then the capital goods, the power space, because without power you really can't achieve that 9-10% growth which you're talking of. That's the basic raw material. And along with that, you'll have the PSU banks bouncing back, because the NPA issue will automatically be taken care of if the economy improves. So it's across all these plus auto.
Right. And what's your sense? So let's sort of wrap up, and let me ask you, Avinash, first. If you were to now look at the next quarter, assuming things are as they are, do you see the Sensex remaining roughly where it is? Any sort of dramatic moves?
I would say that from a market standpoint of view, I would say that the index could possibly not see a massive kind of correction like what we have seen now. I think I would say that from the Nifty point of view, I would not be surprised that say around 8,000 or maybe 7,900 there could be a bounce back. But in case of companies, I think it could be a long way whether they could outperform the way they have performed in the last 12 months.
Right. And you're saying all those 7 baggers and 8 baggers are unlikely to come back.
I think one clear theme, Govind, which is emerging now is companies which are exporting in a large way are definitely going to benefit because of a weaker rupee. So you'll see probably some sort of activity happening there, because their earnings are going to get obviously boosted by the currency impact.
Correct.
So otherwise, if you talk about core demand, at least till September, nothing great is going to happen.
Okay. Ambarish, last word?
Something similar. I mean, at least for the next 3 months, I don't see anything happening. The markets would be painful because people have got used to making huge profits in a very short time. That's not going to happen. They'll in fact be incurring losses. At the same time, in case the
when you say losses, you really mean specific stocks? People who put money on specific stocks which have zoomed up and so on.
And especially if you're talking from a short-term angle. If you're talking from a longer-term angle, I'm clearly bullish on the markets. But then people generally don't have patience. So they look at short-term. If they made losses, they exit.
Right. So moral of the story is the markets are looking reasonably robust. There is still optimism in the markets priced in, but it's important to ride this one out till some of these other macro and micro signals start getting clearer.
Absolutely. I think one should wait, but it's time to invest going ahead. Over the next 3 months would be the window to invest, especially those who have missed out in the last 12 months.
Right. And I think that's the best note to end on. That finally at the end of the day, this is an opportunity to get in rather than sort of sit outside and wonder why things are not going well.
Absolutely.
Thank you so much for joining us. Well, we need to take a break now. Coming up on Policy Watch on the other side, we wonder why there are lingering questions on the new GDP series. Stay with us. Welcome back to Policy Watch. How fast is India growing? Well, that's the big question that people are asking when it comes to trying to understand what is India's GDP. Well, there seems to be concerns once again, this time by a parliamentary standing committee, which says that the new series of national accounts with 2011-12 as the base year has raised more questions than answers. The reply of the ministry regarding the authenticity and credibility of the new series is also vague. And this parliamentary standing committee includes, of course, among other people, former Petroleum Minister Veerappa Moily and former Prime Minister Manmohan Singh. Apart from that, the Chief Economic Advisor Arvind Subramaniam has also once again raised questions about the new GDP series and how fast indeed India is growing. Let's try and understand that once more from an economist and try and see what the gut says, if nothing else. I'm joined by Dr Brinda Jagadia, former Chief Economist at State Bank of India. Thank you very much, Brinda, for joining us. So, Brinda, let me begin by asking you, first of all, this problem has, I mean, the issue cropped up a while ago. It's now more than a couple of months old, and yet there is a lingering doubt about these numbers, the construction of these numbers, the source of these numbers, because people just don't seem to feel it's right. Why is that?
So I think directionally there should be no doubt, because the economy is growing. Where the doubt comes in is the level. So for 2013-14, the GDP number was revised quite sharply upwards from 5% to 6.9%. Now, this revision, there were a few factors behind this revision. One, of course, was a change in the base year. But this is nothing new. It happens every 5 years, so that's one. But what really triggered
and the last time it happened, when you must have been looking at it, you didn't see anything unusual or...
No.
Yeah.
But what really made it unusual were two factors, I would say. One is the change in methodology, the coverage. For example, earlier they would take industry data from about, say, 3,000 companies or so. Now the entire MCA database, MCA 21, that is taken to reflect the increase in industry. That means about more than 5 lakh units. So that's a huge difference. Another difference is the move to international standards of accounting. So earlier we would take GDP at factor cost. Now we are taking GDP at market prices, which means taxes and subsidies are also included.
How much of a difference does that make?
It's not very clear exactly how much the difference
it has made in this case. Okay.
Yes, it's not very clear, but so it's all a combination of all this. Now, even the finance side, for example, like I said, for the manufacturing companies, of course, we have the MCA database. Even for the finance companies, data has now been taken from stockbrokers, from asset management companies, from insurance, SEBI. So a whole lot of players are now brought into the net.
Right.
So this expanded coverage and expanded number of players, this is again one of the factors.
Okay, so a corollary to that question would be also the breakup. I mean, so what's the split in terms of manufacturing, agriculture, services? Is that undergoing any shifts in this new construction? This is just to sort of refresh our viewers' minds about where we stand.
Yes, so what has happened is that where agriculture is concerned, the share has been kept almost at the same, like as around 18%. Where industry is concerned, there is an increase in the share of industry from 24% to 30%, mainly because of a push to manufacturing, and so services has been brought down from about 57 to 51%. Now, because of this increase in manufacturing, the increase in weightage for manufacturing, the growth in industry has actually moved up from 0.4% to something like 4.4% under the new series. So there's a sharp increase in manufacturing.
So is that the one factor which is causing the biggest swing?
That's really a very, very major factor.
Okay.
So there is this change in the shift in the weightage, which is also explaining this this shift, this huge thing. Now, the skepticism, as you mentioned, where does this stem from? Mainly because during this period, now remember 13-14 was also a difficult year when we saw huge capital outflows, when we saw inflation being very high, current account deficit being an issue. So during this time also, investment and savings were down. They went down, but imports fell by about 10%. So during this period, with such a background, we are seeing a sharp increase in GDP, which seems a little difficult to square up. The leading indicators, taxation, the
capital formation,
and credit growth.
Yeah.
So all these they have been lagging substantially, and we have large stalled projects which haven't taken off, which are just waiting for clearances. So in the background, with this being the background, it is a little difficult to square up and say that GDP growth has been robust.
Right. So now going forward, I'm going to ask you two questions. One is, of course, what do you finally think about all of this? But before that, what needs to be done in a sort of post-haste manner so as to assuage the fears of those who are trying to make sense of these numbers and then build their own forecasts and their own strategies on the basis of this?
Okay. So my own gut feeling is that we are on the right track. So the GDP growth, of course, is going up, and there
is no doubt about that.
There's no doubt. Yes. So what really triggers, if the government can come out and explain how we have such a strong, robust GDP number in the face of weak macro parameters, other parameters being weak, because for the year 2013-14, for the other years
so the
there is
Ministry
no
of Statistics and Program Implementation has been giving explanations on that count, haven't they?
They have, but I think that has still not dispelled all the doubts.
Right.
In spite of all that, if doubts persist, then I think there is need for greater clarity.
Okay. Now, if they say that, okay, we are going to stick to our guns and these are the numbers, I mean, not that we are expecting them to revise it, but if they say that they stick to their guns and these are the numbers, then what happens?
if they are able to explain away the doubts which have been raised by analysts, policymakers, a whole host of people, academicians, if they are able
and
to...
the Parliamentary Standing Committee.
Of course, most important, the Parliamentary Standing Committee. So if they are able to clearly explain and put it out in such terms that everybody can understand and accept, then I think that should not be an issue. But we need to see that coming in right now. But my own sense is that, like I said, directionally we are on the right track, and we need not worry about overheating at the moment, just because we see GDP moving up from 6 to 7 to 8% plus.
Exactly, yeah, that could be a matter of concern, right? At one time we are thinking that things are going south, but suddenly we have to be grappling with the effects of things going sort of much faster than we thought they would.
Right, and if the economy is overheating, what should monetary policy do? So I think that's a little premature at this moment, because I think there is still excess capacity, low oil prices, and flexible monetary targeting, which the government framework, which the government and RBI have adopted. Those are going to help anchor inflation expectations and keep prices under check. So I think overheating is not something we need to worry about at the moment. We just need to look at more clarity on these numbers, and that's because these numbers are very important. It's based on these which our policies are going to be formed. So I think there has to be unanimity, more greater consensus, and more greater acceptability.
Right, that's important. Brinda, so what's your gut telling you?
I think we're on the right track. We are growing, certainly, but if there can be some greater clarity on this, like I said, if investment is
okay,
going down.
let me make that question a little more specific. Is there any element of the new GDP series or the construction of it which makes you wonder a little more than, let's say, other areas? Let's say, which is your personal doubt is the highest?
You know, my personal doubt is, yes, if investment hasn't picked up, and if government has been on a fiscal consolidation mode, then where has investment come? And if projects have remained stalled, then where has this investment come from? That's what makes me
and investment does lead to GDP growth, and these. So, I mean, these are amongst the 2 or 3 things which must link for GDP growth to really take off.
And banks are not lending. So, where is this credit coming from, and where is this investment coming from? I think we need to know that very clearly.
Right. But the good news is that directionally we are on the right side, in the right place, and going in the right speed. But how much is the big question, which hopefully will get resolved soon.
Right. Absolutely.
Right, Brinda. Thank you very much for joining us today. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.